This year for Halloween, I was a cat, but maybe I should have been a bull instead, because I am bullish on these markets and still think there is more upside coming into the year's end when it comes to the stock market and crypto market. In today's video, I'll continue to talk about setups that I'm watching in this market right now. All I ask as we get started is you hit the thumbs up button, subscribe, all that good stuff. Let's jump in. I had someone recently comment on my video when I talked about the monthly chart for the S&P 500, and they called this chart, specifically they used the word disgusting, mentioning that they think that there is too much green. It's frustrating how long this has gone on. But the danger here is that assuming because a chart has gone in one direction for a long time, that it has to immediately turn back the other way. And in the sense that is this market stretched when we talk about the stock market, etc., I would say, yeah, probably. But stretched does not mean that it is a timing specific way to say, okay, well, now that it's stretched, it's got to come back. Because if you've said that or thought that way, it has been a really painful year in 2025. Whether you're looking at the S&P 500 during these kinds of moves or gold, which has consistently stayed stretched for a very long time here the last few months. If 2025 has taught us anything, it's that momentum this year specifically has been a very winning force. Now, momentum is not a winning force every year. Let me be very clear. There are also times in markets where you get consolidation, you get back and forth, and momentum is a terrible factor. But at least for now, the trends in markets have been very strong and following through really nicely. And part of being a good trend follower is that when something is trending, you don't assume it's going to stop trending until it actually stops trending. It's a simple concept that a lot of times we as traders tend to overthink. When something is in momentum and trending, it's easier to ride it than it is to fade it, especially in a year like 2025. Now, maybe 2026 is different. Maybe overstretched means sell that and it turns back around. But in 2025, overbought readings have been bullish signals. Let's just go through a couple examples of that so far this year. We had overbought readings back in May and into June. That was a buy signal. If we take a look at July was overbought. We saw the market continue to push higher. Same thing happened going into August. Same thing happened before October. And recently, we've also seen an overbought reading. Again, the dangers of a market like this are assuming, oh, this is stretched, it's got to come down. That has actually been a very losing strategy this year. Now, will that change? Of course it will eventually. Eventually, markets won't keep drifting higher and higher and higher. But I don't claim to be smart enough to tell you when that is. Instead, in my trading, I prefer to just ride momentum until it no longer is trending. So yes, from a pure momentum perspective, I think the stock market can go higher into year's end. Does that guarantee that we're going to see no dips and a straight line up for the rest of the year? No, that's highly improbable. Markets don't typically move in straight lines. You typically do get pullbacks. You typically do get, continuations. Even with great continuations, there's periods of times where you get spikes in volatility and dip opportunities as well. But I'm still long the market, specifically long NASDAQ. I also have a position long on the Russell, and I recently picked up a long position in Bitcoin. And the main reason behind all of these trades is that momentum still favors the bulls. Now, the key distinction here is that momentum also means riding it until it no longer is moving. So if something breaks here, then I'm going to jump out and I'm going to take small losses, or in the case of NASDAQ, I'll take a profit because I've trailed my stop loss into the positive territory. So I can't lose money on this NASDAQ trade. I could just get trailed out for lesser profit than I'm currently floating. But what about gold? Has gold lost its momentum? I would say that at least the short-term momentum that was a one-directional push for multiple months is probably done for now. From a technical perspective, the Edge Finder is now giving a 4-hour and daily chart trend that is bearish, and we can also see that in the 20-day moving average, which we've lost. However, the longer-term moving averages remain bullish for gold at the 50 and 100 and 200-day moving average level. We can see this visualized on the chart as well, but I want to show you something I worked on last night. I just added a simple moving average heat map to the Edge Finder, which allows you to look at the 20, 50, 100, and 200-day moving averages for our full list of assets and symbols, and to scan for the strongest or weakest trending charts. So for example, if I set each of these to bullish, you can see that I've now filtered for charts that have bullish signals on all 4 of the major moving averages tracked. This generates a list of some of the strongest trending charts currently. Of course, if we flip this around, I've set all of them now to bearish, you can see some of our weakest looking charts. For example, the British pound, which has completely lost its momentum that was earlier this year, right? February, April, March, we saw really strong British pound moves and have now pretty much completely erased that and now look like we are moving to the downside, even breaking key longer term levels of support here, or at least trying to at the time of recording this. If I just look at pure price action, you can see we are sitting just shy of breaking through this low. And if we break and close decisively lower, I would not be surprised if we are going to see the pound continue to roll over. We are seeing a longer term slowdown in this chart. I would say that if you are looking at this from a bullish perspective, this is kind of your line in the sand. Looking back several months, this is a key area of support. Let's see how price closes today. Here's a look at the current top setup simple page. And what we can see is it is still very risk on in the Edgefinder's readings. When looking at sentiment, technical, and economic data, we can see Bitcoin, US oil, S&P 500, Nikkei, Chinese stocks, NASDAQ, Dow Jones. These are all getting bullish signals overall within the Edgefinder. So I'm looking for pullback opportunities on this selection of charts. Today's video is sponsored by a brokerage that I have personally used for the last 5.5 years and absolutely love. The sponsor of today's video is Webull. With Webull, traders can trade US listed stocks, international ADRs, OTC securities, and fractional shares. You can also trade ETFs with access to over 3,300 ETFs. They also offer an advanced screener tool and research platform. And if you're an options trader like myself, you can check out their options platform, which I find personally to be super advanced but also really easy to use. With their options, you can execute commission-free trades with support for multi-leg strategies, real-time Greeks, implied volatility data, and both equity and index options. And somewhat more recently, they launched futures as well for those interested in trading all sorts of different futures contracts. You can also buy and sell over 30 different cryptocurrencies within the app. And here's a couple reasons why I personally love Webull. Check this out. First and foremost, when it comes to trading costs, they offer 0 commissions. And that's specifically commission-free trading on stocks, ETFs, and options. However, index options may have low contract fees, regulatory and exchange fees still apply. And one thing that sets Webull apart from the rest is their incredible charting software that they offer. It's super clean, easy to use, and pretty advanced. Their platform includes over 50 customizable indicators, 60 technical signals, for example, candlestick patterns and trend lines, Fibonacci retracements, multiple line styles like Heikin-Ashi, and so much more. And if you want to harness your skills before going live, you can also use their paper trading platform. This allows you to trade with real-time data with a risk-free environment. And just as cool as the desktop app is actually the mobile app, which I use all the time because it is super clean and easy to use. With Webull, you can have a cash account, a margin account, an individual or a joint brokerage account. You can also do traditional or Roth IRAs and rollover IRAs. And while there are so many other reasons that Webull is such a standout brokerage to me and why I've used them personally for the last 5.5 years, maybe the easiest reason as to why I like them so much is their super clean interface and some of the statistics that they actually show you when you are placing trades, etc. For example, the P&L calendar is like a super popular feature, and it's one that I've really loved having over the years. So if you're interested in exploring Webull yourself, check out the link in the description down below, or you can download the app on the App Store and explore it to see if it's a good fit for you. So sign up with my link below and take advantage of all the great offerings Webull has waiting for you. Now back to the video. Back to precious metals for a second with this concept of momentum. I wanted to reiterate that I think that the short-term momentum, specifically like the 20-day moving average, has kind of been lost, but long-term momentum still remains intact. And I wanted to show you something else that I found with gold while looking through the Edgefinder this morning. This is another new feature we just added. It's called the AI news feed, and it generates news summaries for us each day. I've selected specifically to get some updates on gold, and we can see that gold has plunged below $4,000 an ounce to a 3-week low recently, with technical analysts warning of further downside risk, which is what we've been talking about with some of the bearish momentum building. However, major institutions are divided. While short-term pressure remains, JP Morgan and Bank of America have reiterated long-term bullish forecasts, which I would largely agree with. And if you don't have access to the Edgefinder, let me make sure that you are very aware of this spooky discount that we are currently running right now. Today for our Halloween sale, you can currently get 45% off the Edgefinder. All the features that you see in my videos, the top setups, the commitment of traders data tracking tools that we've built, the AI generated news summaries, the AI market scanners, and so much more. The put to call ratio, endless amounts of data that we have built over the last few days that we have built over the last few years is yours at the lowest price of the year right now for 45% off. If you're somebody who watches my videos and enjoys what I do in terms of market commentary, you can start doing it for yourself. The reason I reiterate that having these tools for yourself is important is because my videos are 15, 20 minutes a day, and they are not always fully encompassing. And sometimes I go off on vacation. Sometimes people are like, Nick, I'll just watch your videos to get access to Edgefinder. But I don't show all the features all the time. And if you take your trading seriously, you probably want to have all the tools at your disposal to make the decisions that you need to be able to look through when doing your trading. So don't miss your chance to get 45% off the Edgefinder for a limited time. Here's how. Down below in the description, the first link will take you to a place where you can speak directly to a member of our support staff with our live chat support. Simply click the first link in the description down below, or if it's easier for you, you can scan the QR code and that will immediately connect you to a real person, not an AI robot, but a real person to speak with on our team about getting set up with the discount and all the information about the sale event so that you don't miss it. Alternatively, you can find all the information for the sale down below in the description as well. Moving right along to the US dollar, the dollar continues to be super strong. Take a look at this. We just found support yet again and pushed off of it. The last 3 days have been strong following the Fed meeting this week, where we discussed in yesterday's video, we heard a bit of a more hawkish Powell than anticipated, basically mentioning that Fed committee members are pretty divided on whether or not to cut rates or not in December. That was kind of the message that the market received. And now I still think we are headed back up to this 100 mark. However, I did take profits on my UUP long position as discussed in yesterday's video. I took a profit of around 3,000 bucks on that trade and I'm out of it. Now I'm still long the dollar against the Swiss franc, but that is my only remaining dollar trade. However, in 2025, it's been a theme of uncertainty around US administration and trade dynamics. A lot of people are uncertain about what the Trump administration is after with all this, tariff and trade drama stuff. But to the market, which initially sold off on those fears, I imagine that it's not out of the question that now that we are getting some more solid answers, we're seeing trade deals get signed, we're seeing things shift back in the opposite direction. I would not be surprised if we do see some of that fear kind of get faded alongside the news headlines that are getting published. If we just took a Fibonacci retracement from the high to the low on the dollar index, I still think we have room to potentially even make a push up to this 101.5 level, or the 38.2% retracement off of the long-term dollar move that we saw earlier this year. Even if you're a long-term bear on the dollar, we could see a couple weeks where the dollar continues to drive higher, but right now I'd say you have a big hurdle for the bears, which is this big level of resistance overhead at the 100 mark. For the last few weeks, this has been my target for the US dollar, and I do think at that point I would pause and wait to see what happens next. You could get that fade right there, but in my view, I still think for now the dollar has some room to just squeeze up, test the upper end of this consolidation zone we've been in the last few months. Another setup I've been watching is US oil. And yesterday I mentioned that our target system was a little buggy. We have since resolved that, so if you have the Edgefinder, our targeting system is now back online. US oil overall is still getting a bullish reading within the Edgefinder, although some of the longer term moving averages still look a little bit bearish. Overall, we've recently seen a bullish trend forming in the 4-hour and daily chart trend. Seasonality also looks good. The commitment of traders data also shows bullishness from institutions, and economic growth signals mostly look good for the US right now, with GDP better than expected, manufacturing PMIs better than forecasts, and retail sales better than forecasts as well. Here's a look at the technical chart for oil, and as I mentioned, those longer term moving averages still showing some signs of weakness. I would love to see us take back the 50-day moving average, specifically here around the 62 mark. If we can get a drive through those levels here into next week, this may be a setup for me on the long side if momentum can start to shift a little bit more in favor of the bulls. Still a little bit hesitant to take this trade because again, we've been in kind of this long-term downward trend on the oil market. So I would just like to see that kind of shake that off and start to show some signs of strength. But you can see Edgefinder is targeting 61.5, 63, and let's call it 65. And these are just rough numbers as, generally speaking, the Edgefinder is not really meant to be a specific entry and exit tool, but it gives you a couple standard deviation ideas. That's how those things are leveled or generated. And so 65 comes out around here. I think that's very reasonable for oil prices to potentially make a move towards in coming weeks. Of course, subject to change, as new data could change this thing to a different score, and that's why we regularly check in to see what scoring is looking like within the Edge Finder. We also added a score scatter plot here. I think this is kind of cool too, especially if you just want to look at, like, for example, major currencies. You can see which ones are getting the highest score if they're further right, or further left get lower scores, and then the average or the approximate market change for the day. We can also see like US indices, etc. It's just another way to look at our scoring matrix, and some people prefer this new visual. And like I said, all these new features are at no extra cost. If you're already an Edge Finder user, these things are now added to your tool for free. And if you're not, don't miss out on that 45% off discount down below. I also wanted to talk a little bit more about this Bitcoin trade idea that I had. Long term, I still think that there is some nice momentum here on the Bitcoin chart, specifically off of the weekly chart. We haven't really seen too much of a move from where I entered, but I am looking for an opportunity to see prices on Bitcoin make a push through highs. Now, this is not a huge position in my portfolio, but Bitcoin to me has potential to continue to push higher and even take out previous all-time highs. I would not be surprised. I know this is kind of a big call, and I'm not, betting the farm on it, but I would not be surprised to see Bitcoin break 125 by end of year and even get into the 130s if we do get kind of a end of year rally, which has seasonally been a very strong repeated pattern each year for the most part in the last 10 years. I'll show you that data now. I've selected for Bitcoin on the full year seasonality tool within Edge Finder. If you have Edge Finder, it's just under seasonality, select annual seasonality, selected Bitcoin here, and you can see the dotted or dashed line here suggests that Bitcoin on the last 10 years has seen a really strong end of year rally. Year to date, we've been mostly following suit with seasonality, barring the March and April very steep sell-off due to the tariff stuff. And I've got to take a moment here just to celebrate a little bit here for fellow Amazon shareholders. We had a really nice day today, considering, the stock has really gone not a whole lot of anywhere in the last year or so. Even going back to January, you can see the stock December, October of last year, we've really traded sideways for the better half of a year. However, today we are up almost 11% at the time of recording this because Amazon had some killer numbers. You can see Amazon's earnings per share came in at $1.95 compared to the forecasted $1.56. This was a huge beat, a beat of 25.2%. My goodness. But specifically, some of the hype around the Amazon earnings was actually about the increased spending guidance that they had, which is good for the rest of the AI trade, but also the AWS growth. Specifically, AI-related revenue doing well is very good for stocks right now because everyone cares about AI, and AI generated or AI produced revenue, I suppose, is really good for specifically the company in question. Because again, that's all the rave right now. Everybody wants to see or hear evidence of AI related revenue being boosted. And so Amazon was taken to new highs. We also had Apple reduce their earnings, which were better than expected. Stock is actually flat here, or just a little bit red following the release. I've selected Apple here within the stock box, and you can see we also did get a beat of around 4.5% compared to estimates. By the way, Stockbox is also available for 45% off discounts. If you're a stock person, make sure to check this one out as we are doing, like I said, a store-wide sale for Halloween. Apple beats Q4 estimates on top and bottom lines, but iPhone revenue comes up short. And one of the reasons that I think the stock market rally can continue into year's end is because we are seeing some incredible earnings reports. Over 87% of S&P 500 companies reporting their third quarter earnings have beaten analyst earnings per share estimates. This represents a historically strong quarter for corporate earnings. And at the end of the day, if you trade indices, look no further than the longer-term projections for corporate earnings as the number one correlated thing to how stocks perform. At the end of the day, go figure. If stocks are earning more and projecting to earn more, the stocks go up. There's a lot of noise in between, and this year, one of the biggest mistakes people made, I've talked about this a bunch on my channel, is letting their political biases and their fear of the news completely shake them out of what has been a really strong earnings cycle the last few years. I mean, stocks are killing it. They're earning more money than ever, and there is a scary side effect. Major companies like Amazon, Microsoft, and Meta are cutting tens of thousands of jobs, largely driven by cost-cutting, AI investment, and restructuring efforts. Alphabet, Google, and Salesforce have also implemented large-scale workforce reductions. And this is a weird part of this stock market rally. What is the quickest way for AI to generate return on investment for companies implementing it? Well, hypothetically, and this is a little dystopian, job destruction. Like if you can replace workers with AI, where does that money go that you were spending on salaries? It goes right into shareholder value. And I know it sounds like something out of, I don't know, the show Severance or something, but it's true. I mean, at the end of the day, if you can cut redundant workforce needs and replace them with AI, it makes stocks go higher. And it's really kind of dystopian because it's like, well, what are people going to do? And those are bigger questions than I think in the short run we can just talk about the stock market impacts. And there's probably smarter people on YouTube that you can watch about the dystopia and all that stuff about, job destruction. My personal opinion, for what it matters, is that I think new technologies historically have caused some interesting stories to play out in the financial markets specifically, where people get really hyped up about a new technology and they overpay for it. They drive stocks to incredible valuations, and then reality sets in, and it takes a long time for those things to really change the world. And so stocks have a great reset. Now, that sounds super bearish, and I'm not super bearish. I'm super long the market right now. But the reason for that is because bubbles also go on longer than people tend to think. And my plan is to trail stops and to ride that momentum. But then what about those jobs that are getting destroyed? Well, here's my choosing to be optimistic perspective, as well as a historical lesson. Typically, new technologies create sort of monotonous, repetitive jobs first very quickly. But the next stage is new industries get built. New tasks for humans, I think, are going to come out of the AI stuff. AI lacks creativity. It's not super creative like a human is, right? At the end of the day, a human, we use AI all the time for all of our stuff. We're building tools, but it's still us, the humans, that are creative and designing this stuff. Now, if you do a job that is super repetitive and super automatable, if that's a word, yeah, AI is probably coming for your job, and that's scary. But I think for listeners, just a side tangent here, I know we've kind of gone off the rails. The best way to make yourself relevant in the future is to be creative, hone in on what you can do with AI to improve things in your world, for your own business, for the business you work at, whatever it is. Make yourself relevant within that picture. Anyways, happy Halloween. Thank you very much for tuning in. And don't forget to take advantage of the Halloween discount before it ends, 45% off. See you next time.